Turbo Trading with head trader Robert Knight, MBA.
This is a talk on how to trade stocks that are coming into the apex of a wedge. You'll hear me talk about this quite a bit, and we'll use tops because it's one of the active ones today, and it did break out of these wedges quite a bit. So opened this morning, ground its way higher, pulled back. You can see it has this topping pattern, pulls back, and then it gets into a sort of a declining channel, but into a wedge formation like this. Maybe like this by the time it's done. In this case, it's a descending triangle, really. But we can see right at the apex of the wedge here. And you'll see me when it's coming into this apex, usually about 4 minutes away. I say watch for a pop or drop in the next 4 minutes. And the stock comes in, gets into the apex of this wedge here. Now, the earlier in the day, well, it does, no, let me go back a step. It's normally going to, 70% of the time, it's going to make a decision on which way it goes, up or down. We don't know. But you will know when it gets in close to the apex of the wedge, that's where you want to have your trigger finger ready. In this case, it pops out to the upside. And you could take that trade. The danger there is you don't know, there's nothing to indicate whether it's going to be a fake out, breakout or not. So you just you can take the trade when it pops and go for the ride, but if it's a fake out, you need to get out of it right away. Don't hang around and hope. In this case, it pops to the upside and works its way higher. Now, oops. Then it kind of got into a pattern like this. So midday, it's coiling all day. It's coiling along here. It's not really giving us any indication of really a wedge. And so a big long one like this, if it pops to the upside, normally it's only 70%, but I'd say normally this is a cup and handle pattern that it formed. This isn't quite flat, but to be a cup and handle, but coiling in a wedge, call it all you want. But it is making higher lows here. And when it pops this time, again, close to the apex of the wedge here, you can see. A little further out, it did pop through it and it continued to go in this case. So, again, when it pops out, now you also have to be aware, though, of the different resistance levels that it might run into. In this case, it would have been 815 and 850. So it pops out, gets to 850, you probably need to sell a bit of stock there. You can also look at this as your A, B, here's C, accumulate, cup and handle pattern. It's a very strong pattern. And when it pops out, you would expect this to continue because it's such a strong pattern. You wouldn't expect it to be a fake out breakout. But you never know. There's nothing that's going to indicate whether it is a fake out breakout or not. All you know is that it's coming into the apex of the wedge, and it's going to go one way or the other. And in this case, it does. It trades up to and double tops at 11.5. Nice trade on that breakout. Now, in this case here, this is now live. I don't really have any kind of coiling pattern. We've got a saucer pattern here, popped up. Maybe, and you always have to check. This thing's up 110% already today, so, how much more can it go? Is the easy money been made? And so you get a saucer pattern here, pops, pulls back, needs to hold support. If it does, then maybe it goes, maybe it starts to coil again. But that sort of gives you some ideas on how to trade when stocks come to the apex of a coil.
Don't forget to like and subscribe to our channel. Reach new levels of trading proficiency. Become a member at turbotrading.biz.